The NEOS SPYI ETF has become one of my favorite daily buys as of recently, and I can definitely see myself building out a sizable position in this ETF long term. Now, this is because this ETF offers high monthly income, growth potential, and also best of all offers it in a tax efficient manner. Now, if you want to learn more about this ETF, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, all right here on the NEOS website, it says looking for high monthly income. And I would say yes, who isn't? The NEOS S&P 500 high income ETF, or ticker symbol SPYI, aims to offer high monthly income in a tax efficient manner with the potential for upside capture in rising markets. Now, some of the objectives are to seek high monthly income in a tax efficient manner, and also on top of that have upside potential when the market turns bullish. Now, this is also kind of cool. It shows that since inception, the NEOS S&P 500 Income ETF, or SPYI, has outperformed some of the largest income-focused ETF peers, and some of these are very popular. And just for full transparency, I personally hold everything in here. So you can see that the blue is total returns. This is dividends plus price return included. SPYI almost has a 20% total return, where XYLD has over 12%, JEPI has 16%, Devo has almost 16%, and SPY, of course, the king of all ETFs, has almost 30%. Now, if you've been watching me for a while, you know I've talked about SPYI in the past, and I have had a few shares of SPYI across my portfolios for several months now, but it wasn't until recently I dug a little bit deeper into this ETF and really realized how this ETF works and why I personally need to add more shares of SPYI into my portfolio. But digging a little bit deeper into this ETF, some of the negatives, I guess you could say, is the expense ratio is pretty pricey. At 0.68%, this ETF, because it's management heavy, is going to cost you a little bit more to hold on to. But with the promising total return so far, at least, the expense ratio doesn't bother me all that much. Now, one of the other reasons I wasn't exactly sure about how much SPYI I wanted to add to my portfolio long term is because a lot of these higher yielding ETFs, although many times offer nice juicy dividends, they seem to decay in price over time, meaning that, for example, if you buy a share for $50, even if it pays a 10, 11, 12% dividend yield, if a year later the ETF is trading at $40 per share, you didn't really gain anything. If anything, you lost money. But so far, since around 2022 at least, so keep in mind this ETF still is relatively new, the ETF is up 3.33%, which I hear you, it's not all that much, but it is in the green, and we haven't seen any major decay, at least as of so far. Now, to dig a little bit deeper into how the SPYI strategy works, it says right here, number 1, the fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven cover call option strategy. So very similar to other cover call funds out there. In this case, we're talking about the constituents of the S&P 500 index, which of course are great holdings. I don't think any of us would really have any problem with having more exposure to the S&P 500. And then on top of that, the fund manager uses cover calls to, of course, generate premium, which is paid out in the form of dividends. But that's not all this ETF offers. Listen closely. It says actively managed by NEOS, the fund takes advantage of tax loss harvesting opportunities, in addition to utilizing SPX index options, classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. Now, take my word for it, as you build your portfolio over time, and I'm sure a lot of you are already very aware of this, you're going to want to think about taxes because, of course, as you start to generate a ton of dividend income, for example, they might not be taxed very favorably. Now, number 3, this is also one of my favorite parts about this ETF, and this is another reason why I really decided on going a little bit bigger in this ETF moving forward. It says the fund utilizes a call option strategy. Not selling options, but buying call options that may include both sold and purchased SPX index options, which may provide the opportunity for upside capture in rising equity markets. So one of the main problems with a lot of these different cover call ETFs is that when you sell a cover call, your upside is basically capped. If the underlying moves up very quickly, you're not going to be exposed to all the upside. But with SPYI, because at times they are also buying call options of things like SPX, that means that if and when the market turns bullish, you're going to have potential exposure to the upside taking place in the market. Now at this point, we're sort of getting into the weeds, and I really don't like talking about taxes all that much on my channel because I think that taxes are such an individual situation that can be so different, determining many different factors, but also looking at things like this right here. Just for an example, it is in connection with the monthly dividend payment of 47.5 cents per share that was paid back in January 2023, just for an example. It shows that 94% of such dividend will be return of capital. Now, return of capital is going to be taxed differently than ordinary or non-ordinary dividends, etc., etc. And like I said, I'm not going to go super deep into that, but just know that SPYI could be a perfect ETF with a great tax strategy for your portfolio, depending on what your needs and wants are. So we talked a little bit about SPYI, what this ETF is and how it works. We even talked about the total return so far next to some of the other popular cover call style ETFs and some of the main reasons on why I'm personally so attracted to this ETF as of right now. But now looking into the fun part, looking at the dividend for SPYI. We're talking an 11.67% trailing 12-month dividend yield, which is much higher than most other covered call ETFs across the market currently, and of course much higher than basically all blue chip dividend stocks. Now, what's also impressive and something that I was very eager to see how this was going to play out long term is if or if not SPYI was going to offer a consistent monthly dividend, because some of these covered call funds, things like JEPB or even JEPQ, due to volatility in the market and due to the different pricing when it comes to premiums in the option market, some of the covered call ETFs pay a very drastically different dividend, which all in all is fine in most ways, but it is very nice to be able to sort of have an idea of what you're going to get paid next month and the month after that and the month moving forward. Now, of course, take this with a grain of salt. SPYI has not been around for that many years or even that many months and has not paid that many dividends compared to some of these other covered call funds, etc. But since the inception, SPYI has paid a very steady 46, 47, 48, or 50-cent dividend every single month since the ETF started. Now, just because SPYI paid this in the past does not necessarily mean that it's going to continue to do so forever, of course. But it looks to me like there's a certain cadence here, and it looks like the fund managers are doing what they can to make sure investors are getting right under 50 cents, more or less, per month, every single month, which I absolutely love as an investor. And one of the main reasons that I love that is because, as you can see here, my larger dividend tracker that shows every single position more or less that I have currently, I have some stocks that pay monthly, some stocks that pay quarterly. And even though most of the names within this portfolio pay pretty much the same amount every single month or every single quarter, there are certain names in here that I own a lot of shares of, like JEPQ, for example, once again, that doesn't necessarily pay the same amount or even close on a monthly basis. And as I build out this portfolio larger and larger over time, and as I get older and even get busier with other things in life, I want to have sort of an idea of where I'm at on a monthly basis, because when it comes to my income, I don't really want any surprises. And for that reason, I would give SPYI a definite positive when it comes to their dividend payouts and the consistency that we've seen so far across the board. Now, for all the reasons we talked about in this video and for my specific strategy investing in dividend paying stocks and ETFs, like I said earlier, I as of recently have been grabbing 1, 2, 3, 4, or 5 shares of SPYI every single day for the last few weeks now. And until I have several hundred shares of SPYI, I plan on continuing to do just that for a while now. But when it comes to SPYI or covered call ETFs that offer higher income potentials from day one, I want to hear from you guys down below. Out of SPYI, JEPQ, JEPB, QYLD, all the popular covered call ETFs, what is your number one favorite and why? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.